turbulent week for economies right around the world, and overnight there has been a further blow. The United States is to have its credit rating downgraded for the very first time.
Meanwhile, there are continuing concerns that the Eurozone debt crisis could spread. We're joined by economist and author Professor Noreena Hertz and Adrian Lowcock, who's a senior investment manager at Best Invest. Let's begin with you, Noreena. I don't think the markets, from my observations, are particularly surprised that the downgrade has happened. But perhaps they're surprised that it's happened at the end of such an awful week for the markets. Was it the right thing to do?
Well, I think a few points. First of all, the agency that issued the downgrade is an agency that has made lots of mistakes in the past. I mean, they did think that subprime mortgages were good, that Iceland's debt we didn't need to worry about.
All the rating agencies
yeah,
did,
all the rating agencies did that. So whenever a rating agency calls something, we have to breathe and think, is this actually a real problem? In this case, clearly, though, the US is in trouble. Growth is flatlining, unemployment remains very high, prospects are looking bad, personal bankruptcies are going up, lending to small and medium-sized businesses is contracting there. So the economic outlook for the US already was looking bad. And then on top of that, what happened was this debt ceiling negotiation, with a result being that the US has now entered an agreement between the two political parties, but there between the Republicans and the Democrats, which is essentially not a good agreement. They're going to not be able to spend their way out of this recession, which is actually what they need to be doing given that the economy is weak. And that's really, I think, what the markets already had responded to and what S&P's rating is really about.
And even if this rating is wrong, even if it was, say, turned back and reversed by the agency as the White House wants it to, symbolically it's still significant, isn't it? It sends out a message to the world.
Yeah, at a very worrying time anyway, when it's a particularly toxic cocktail of the threat of the debt crisis in Europe spilling over to big economies like Spain and Italy, and already the weak US economy. So it's a worrying time, it's a dangerous signal, and it might well have ramifications. We've never been here before. This is uncharted territory, so it's hard to know how it will play out.
Adrian, just listening to the words that Noreena's using, dangerous time, it's worrying, we need to be careful. You're an independent financial advisor. You're speaking to people all the time who are saying, how can I best use my money? What should people be thinking about right now as they hear about this malady that's hitting the financial markets?
I think what we've got is we've had a period since 2008, since the banking crisis, where we've been in uncharted territory for some time. So, and we've known that there's going to be low economic growth. It's usually a sign after a banking crisis that you do have weak economic growth, and it's going to continue, and it's going to continue for a number of years. But the thing is, companies are actually in quite good health. They're very profitable. They cut costs quickly. So there are going to be investment opportunities. You've just got to be very, very cautious.
OK, but how are the banks going to react? Because one thing everyone remembers, and anyone who needs a home loan or mortgage, knows how difficult it is now to get to the bank and get that cash. Is that going to still be difficult?
It's eased up a lot since 2008, but the difficulty is, how will a downgrade in the US debt affect interest rates globally? And that is unknown at the moment. Interest rates could rise, it could be harder to get a loan. So from a mortgage point of view, you want to make sure that you've got a good loan to value, i.e. You've got a bit of equity in your home, you've paid a bit of the mortgage off, and the size of the mortgage is a lot less than the actual value of the property, and that way you'll be able to negotiate better terms with your lender.
Noreena, I mean, it's easy to get distracted by what's happening over in Washington in the United States, isn't it? But if we look the other way, across the channel to the Eurozone, what's happening there is perhaps even more significant for our economy. Would you agree?
Yes, I mean, Europe is, of course, our main trading partner still. Germany, we're very intertwined with the German economy. So it's not as simple as for George Osborne to say, we're okay because we're the UK, we're not part of the European situation. We are very much part of it. And a crisis in Europe will bleed onto our shores. We need real political leadership now in Europe. We need politicians with capacity and capability to move things forwards. And we haven't yet in Europe seen anyone who seems to be rallying leaders around.
Noreena, Adrian, thanks very much. We should just say, Robin Brown, our political correspondent, has been in touch with Downing Street, and sources say that another round of calls between EU finance ministers is likely today, and that will discuss the next steps, what the next steps should be over the mounting concern over the stability of the Eurozone and the risk of default by several member countries. That just coming through from Downing Street sources.
17 minutes past 8.